New filings from the SEC show that executives and directors of Koss Corp sold $44 million in stock early this week while it was getting swept up in all those Reddit trades. The Koss family sold $31 million in stock. That was more than the entire market cap of this Milwaukee-based headphone maker before its shares went from $3 to $64 as it became a favorite of that retail trading crowd. Now, it looks like the family sold over about a 2 or 3 day period when prices were between $19 and $60 a share. At least that's what they sold for. Now, among the sellers was the CEO and chairman of the company, Michael Koss. His father founded the company, and the family owns 75% of Koss Corp. Now, other directors and executives sold an additional $13 million. Koss had short interest above 35% with a low dollar share price. That's what made it a favorite among the traders. Now, it's unclear whether the sales were part of a prearranged trading plan. A company spokesperson declined to comment when reached by CNBC. Brian?
Well, that's the key, okay? And before everybody gets all, up in arms with the pitchforks and the tar and the feathers, a lot of these insiders, and I don't know if it's this case or not, but it happened actually, by the way, I think it was the Pfizer CEO a few months ago on the vaccine news. It was like he sold into the news. It's automatically triggered at a certain price, right? So a lot of these folks, they don't even know. The stock hits it, it sells, they get a notification. We don't know if that's the case, but that does happen a lot.
Well, Brian, if you look at the pattern of sales, usually these prearranged sales are sort of one slug at a certain price on one day. These sales don't look like they were part of a prearranged sales program in that they were at various prices on the same 1 or 2 day period, multiple sales. So you're right, we don't know. We also don't know what the family plans to do with this money. Maybe they plan to take this $31 million, they own 75% of the company, and take it private or reinvest in the company. And they may think it's a great company, it's just not worth $150 million or $200 million market cap that the investors put on it. So you're right, we shouldn't villainize them, but you don't want a situation where the retail investor is buying and the insiders are selling at this scale. That doesn't instill confidence in the company or the democratization of a stock market, which is what we want to happen.
Shepard Smith here. Thanks for watching CNBC on YouTube.